What is going on YouTube? Welcome back to another weekly trade recap video. In this video, I'll be going over the price action from January 26th through the 30th. As always, I'll be going over my wins, my losses, and my lessons. So stay tuned until the end of the video as well, where I'm going to be talking about a little bit of psychology and just the logical steps moving forward I need to make for next week. So stay tuned until the end of the video for that. This week was a pretty rough and taxing week for me, so I'm glad it's the weekend. But let's get right into Monday and talk about all these trades. I will see you guys there. All right, everybody. So I got Monday's price action pulled up now. I am on the higher time frames, so starting out with the 4-hour time frame just to get the bias and narrative. I noticed going into the day we were respecting this 4-hour bullish gap with a really big lower wick showing buy side pressure, and on the 1-hour time frame we also tapped into this 1-hour gap, and pretty recently it was looking like we were inversing this 1-hour bearish gap. So going into the day I was leaning overall bullish, but always be reactionary to the price. So let's go to market open. I need to skip ahead a little bit. Okay, so I got market open in front of us now, and just one more thing really quick. Since we were leaning bullish on the day, I was looking for any mechs to go long or any continuations, and I forgot to show you guys the draws of liquidity, but it was this previous day high that wasn't hit yet, and then these two obvious buy side levels right here were the main draws of liquidity, so that's good. Going down to market open now, we had this 15-minute intermediate low right here that was resting inside of this 15-minute bullish for value gap, and we did make a nice reaction from this level on the 30-second time frame. It was this 30-second inversion, and unfortunately this trade was just a break-even trade. Could have TP'd at this PM high for the low-hanging fruit. However, this is literally about the only thing I want to talk about from this day. The reason I didn't really take this trade and didn't really like it, on ES we had an SMT at the lows, which was good, but the 30-second inversion candle was so close to the previous day high, so you would have literally had to go break even like right away because of just how much of an external SMT there would have been. So either way, for me, I think this would have been a break-even trade no matter how I went about it, if I was going for 1-to-1 or whatever the case may be. So that's kind of the reason I didn't take it. I also wasn't entirely confident taking a 30-second inversion this day just because I wasn't super ready on Monday. So I do need to do better about being ready. I know I've journaled that before, I think. So just being fully ready on the charts. But this would have been a break-even trade, and I will play out the rest of the session, but there's no other trade setups the rest of the day. We went up, hit previous day high, no mech model shorts for me, and then we end up going to the buy side level. No continuations for me as well. I'll show you guys the 5-minute time frame. So here's the original 30-second, and we move up, and then no good 5-minute continuations or 15-minute continuations for me. So main lesson from Monday would be to make sure you're ready on the charts. I guess I could talk about this a little bit. You could maybe squeeze out a 1-to-1 right here, however you want to do it. I am really getting into trading how your personality fits. I wouldn't have wanted to go for a 1-to-1 right there personally, and also this will tie into the video later. I really want to put my stops at the wick low instead of body low now because I don't like getting boned if I get stopped out on the body low, and that's just my personality type. I'm just going to put it at the wick low and target a 1-to-1 for whatever the trade looks like. I'd rather adjust my target than adjust my stop loss because I'd rather know my stop loss is at the true logical level where it makes sense to get stopped out. Anyways, that was like for a different part of the video, but those were the only two lessons I could grab from Monday. Not much else to go over. It was a break-even trade that I didn't take, so I will see you guys for Tuesday. All right, guys, so I have Tuesday's price action pulled up right here. So this day was a pretty simple day, to be honest. What the draw of liquidity was these relative equal highs. I'll show you it on the smaller time frame so it's easier to see. It looks like we hit it already, but we didn't, obviously. And then we were respecting bullish and disrespecting bearish on the 4-hour time frame. Show you guys the 1-hour time frame. Printing 1 hour for value gaps as well, and we have these relative equal highs above right here. So going into the lower time frame at market open. All right, guys, so I have the lower time frame pulled up right here. I did take 2 trades this day with the overall draw of liquidity being these relative equal highs. So we have this high, relative equal highs. We have a bullish 4-hour for value gap and London equal lows right here as well. 15-minute unmitigated bearish for value gap, relative equal highs. So this is the first trade I actually took. As you can FOMC. I was ready to trade this day right at market open, but this trade was a loss, unfortunately. So what this was a 1 minute inversion targeting the relative equal highs right here, and I was going to go break even at this 15-minute unmitigated bearish for value gap, and this trade did sweep out internal highs right here, but stopped me out. I didn't go break even at internal highs. I wanted to go break even at the 15-minute unmitigated. It just made sense for me, and that's what I wanted to do. But we did resweep this current low right here and got a nice V-shaped reaction. The highest time frame inversion of this leg is 5 minute, whereas that's where I entered my trade. It's the same thing. I was targeting these relative equal highs, and I went break even at this 15-minute bearish unmitigated for value gap. On this trade, you can see we absolutely blew to the target. Beautiful V-shaped recovery. So let's get straight into the lessons from this one. On the first trade, I was ready to trade for the day. If I need to nitpick it, let me get rid of this. If I need to nitpick it, the 1 minute inversion did sweep out the manipulation leg high, which isn't ideal because sometimes that's where you go break even. However, I am getting into learning to try to trade for the best of what's my personality type, and I wanted to go break even at this 15-minute bearish unmitigated. So it didn't matter too much for me. It was still good V-shaped recovery. I liked how we tapped the 4 hour, and we have this huge rejection wick right here. Got the inversion, good displacement, and an unfilled 15-minute. So if we wanted to go bearish, I was expecting us to tap that and then go bearish, kind of sweeping out this LR. But to nitpick it, I will say it would be better if we didn't sweep out the internal high rate. On the second trade, not much to say, honestly. This is a really banger setup. We go to the consequent encroachment of this 4 hour bullish for value gap. Pretty clear and obvious V-shaped recovery. V-shaped recovery is a super important signature in price that I've noticed when it's really V-shaped recovery like that, not wide, not a U, like instant delivery, probability of trades playing out goes up. So this was a beautiful trade, and the draw of liquidity was still there. The displacement was there, and the highest time inversion was there. Not much to say about this one. We did hit the 15-minute, and then the rest of the day I really don't care about because I just get off the charts, but I'll show you the New York AM session. That's where it ended. So lessons for this one, not much at all. It was nice to have a good setup that the market gave us. So just the lessons on that first one, and I'll see you guys on Wednesday now. All right, y'all, I got Wednesday pulled up. Not gonna lie, Wednesday was FOMC, so this day will be like literally 2 seconds long. I got the 5-minute chart of the New York AM session pulled up. I don't trade pre-FOMC, and I am busy working in the afternoon still, so I didn't take a trade on Wednesday, which is totally good. I just enjoyed my day. It was a nice day off from the charts. From my past experience, when I have traded FOMC, like when news gets released FOMC afternoon and I trade the AM session, I just get boned. So I recommend not to do it, but some people do trade FOMC and FOMCs, but no trades taken on Wednesday. So I'll just see you guys Thursday. All right, y'all. Thanks for sticking with me throughout the video so far. I do have Thursday's price action pulled up. A pretty rough day. So let's get to the bias for you guys. Going into the day, let me just do this. Going into the day, I was leaning bearish. The chart wasn't right here. It was probably more like this kind of. Yeah, it was more like this. Was it more like this? Okay, part of this candle, this is like the candle that closes at 10. So this candle was forming. I was leaning bearish on the day just for the fact that we were moving lower. We could rebalance equilibrium of this. There's a 4 hour and a 1 hour right here. Fair value gaps right here. I know this is super extremely messy. There's a previous day low intact. Sorry, this is so messy. Let me just jump down to 15 time frame. Oh man, this is still messy. Sorry, yikes. Okay, so basically I was leaning bearish towards all the draws lower. Let me try to show it a little bit better. Previous day low, fair value gaps, PM low, AM low, Asia low, another AM low, 4 hour, 1 hour unfilled. I didn't think we were going to go all the way down here, but I mean, I was just leaning bearish on the day towards like the more, what I thought obvious objectives that we would tackle for the day, but we ended up dumping. So since I was leaning bearish on the day, we did print this nice 15-minute bearish for value gap right there, and zooming down to the lower time frames, that's what I wanted us to tap to get a trade setup. We did tap it. Unfortunately, there was just no inversions to the downside, and apparently that's what we wanted to take as fuel to absolute just dump. So I'll pause right here, get rid of this so it looks a little bit better. And this was the first trade I took. This was a mech model, and I'm going to talk about this later in the video, but partly right now too. So I was leaning bearish on the day. However, no entry setups to the downside, and we did just take out a bunch of draws of liquidity. So we were inside of a daily, a 1 hour, and we just swept previous day low. low. So I took this 30-second inversion right here. Here's the gap. I liked this V-shaped recovery. I liked the displacement combination of all the candles. Probably thought I was gonna at least get break even out of this 5 minute or this 5 minute, you know, so like if we want to keep dumping, tap the 5 minutes and move lower is the logic behind the Mac model. But obviously I'll just play this out, and it was a simply just lost the trade, fortunately. I think I executed it well. I think the logic behind it was good. I'm not terribly upset or anything like that. I would kind of just talk about the lessons at the end, but let's keep playing the day out. Back on the 1 minute. So that Mac model doesn't work out. So we're not even rebalancing 5 minutes. We're just continuing to dump. And look at this huge move down again. So far today we've dumped almost 400 points, which is another point I have to talk about later as well. But this is another area I was looking for Mac model longs, mainly for the fact that we never rebalanced into 5 minutes, and I wasn't really loving the idea of taking continuation shorts towards these draws that did not seem like a logical object for the day. I just don't want to be taking continuation shorts in such a premium area after we've already dumped so much. I would need to see such a bigger rebalance move. So that was kind of off the table for me so that's kind of why I was looking for longs. This structure of this long was a really good structure. Dang, I just brain farted really hard. But as you can notice right here, we're now in a 1 hour and a 4 hour. We're also near underneath equilibrium of this pretty big impulsive 4 hour leg. So we're in discount of the range as well. As you can see, we accumulate, we create nice structure, clean new leg. I liked this 1 minute fair value gap. That was really obvious. And we get clear displacement right here. So this is where I enter my trade, and I'm going to go break even at this high. And the overall idea, I mean, we have so much room to rebalance, but there was a 5 minute bearish fair value gap, so I'm just going to look for a 1-to-1 and not even break even on this one, unfortunately, and I get stopped out. So yeah, let's talk about it. To talk about the first trade, I got to be better about taking a 30-second inversion. I think after, you know, we just absolutely dump. I mean, we did have the daily in the 1 hour. It did just sweep previous day low, and we had V-shaped recovery. So it's a little tough because I think if we're going to go lower, I thought we were going to, you know, take this temporary fuel, use that to rebalance, and then continue lower if we want to be lower. And if we wanted to be long from here, obviously I'd just hit my take profit and then it would just go long. So I mean, the logic was there, but taking a 30-second after a really big dump is a little sketchy. I think I kind of want to keep that in mind. And then when I do up the time frames, the legs just mesh together and it looks like I'm just catching the bottom of a falling knife, really. Like, yeah, we had this reaction right here, but maybe I was too zoomed in. It looks good right here, but I don't know. I gotta be better with context maybe, but also I'm not gonna beat myself up for this. I know I don't take absolutely stupid trades, so yeah. But moving on, this one I know what I want to take away from. This one was, honestly, if we dump almost 500 points probably now, from this high to that low, yeah, 450 points. If we dump 450 points, like what comes after distribution, accumulation? So just chop price action. And so this mechanically looks really good, but after 500 point dumps or pumps, probably just not going to trade. I think I have experienced this before a while ago, so I think it is consistent. So it's a good, decent rule to add. Maybe that's why this setup failed. Also, if I really want to nitpick it, my break-even level was this 5 minute, which was technically mitigated, but it was mitigated by like a tick. I mean, that doesn't like feel rebalanced. So that could have steered you to not take this trade setup as well. But I mean, I'm not going to go too hard on myself. We were in the 4 hour, 1 hour discount of the overall price leg. Definitely got to rebalance, but we don't got to rebalance right now, timing wise. So that's what I would say I take away from this. But I mean, looking back at the whole week kind of right now, it wasn't a terrible week up until Friday hit. So yeah, I'll show you guys Friday now too, and then we'll talk about it. All right, boys, last day. Let's get through it. So higher time frame. Actually, quick do this. Yoink. Higher time frame. All right, so going into this day, I was bearish on the day. Here was that really big dump that we had. We were respecting this 4 hour bearish for value gap. We were respecting this 1 hour bearish for value gap. We were respecting this 1 hour bullish for value gap, which I will talk about this at the end of the video. It's not ideal basically, but I was leaning more bearish than I was bullish. But ideally, you'd want this inverse and then clear path to the sell side liquidity below. But with that in mind, mind, I was leaning bearish on the day. So what did I want to see? I want to see these 1 hour intermediate highs get swept, Asia high to get swept, basically any of this liquidity right here. We did have a data high, any of these highs to get swept to make a move lower towards data low words. So going into market open, I was basically expecting a Judas swing up, which is a fake move higher, and then the real move lower. And that's exactly what we got right here. So we go up, we take out the data high, we sweep out all these intermediate highs from the 1 hour and the 4 hour gap, and we get this nice displacement lower. And this is where I enter the first trade. All right, so it's a 30-second inversion. We swept data high, 1 hour intermediate, 4 hour intermediate, and you're like, Matt, we didn't sweep out the Asia high. We did though, there was an SMT, so I wasn't worried about that either. So we had an SMT at Asia high, so ES went above Asia high and did at time, so you can see it left it right there. And we get the juice swing, everything was in line with the plan. So I took this first setup and unfortunately it was just a straight up loss. So I get manipulated out of the trade and we move up, eventually take Asia high on NQ as well. And going into this setup, I was knowing that like I could get manipulated out if we want to resweep this high and then make the actual move lower. And that's exactly what happened. So I was looking for still a short setup because we just swept out all this LR. We have this LR and data low, draws lower. So we did get a 2-minute inversion that I took right here. I'll mark out the inversion, mark out the 2-minute. Nice RR trade. Okay, and I'll talk about this because I got stopped out right here. So I'm not going to put my stop loss at the body highs or the body lows. I ain't going to do it anymore. I want to put my stop loss. I think I already touched on this earlier from the other day. I'm putting my stop loss at the high of the wicks, which is the overall high or the overall low, because that's where it makes sense to get stopped out now. And if I sacrifice RR, I sacrifice RR. I'd rather extend my TP than mess around with my stop loss. So I'm going to do that now. So I got stopped out right here when we went up to the body highs. I believe it literally made an SMT. Did not do, no, it didn't. It didn't make an SMT, my bad. But I would have basically gotten break even on this trade if I didn't get stopped out immediately, if I had my stop loss right here. And it was pretty choppy day. Still, like the trade didn't deliver up till 10:30 when you entered in at 9:42. So you would have gotten break even on this trade most likely, unless you like didn't break even and just targeted data lows. But lesson from this day, 30-second was, I'll go in order, sorry. The 30-second was what I wanted to see. I totally could have seen price action flush towards this LR and the data low below. And then the 2-minute, I need to put my stop loss at the overall high or the overall low simply. So to this, target data low with the external thought of this sell side and this LR kind of delivered like that. Coming out of this 4 hour and 1 hour bearish. But yeah, so let's talk about the lessons now. The kind of psychology thing I wanted to talk about and the lessons, the big lessons I'm going to take away from this week. So combining everything all together, the lessons I'm taking away from this week is, for example, on this day, I'll use this day for example, the bias and the narrative and the context, all those words are interchangeable, wasn't exactly crystal clear, super A+, like obvious. The thing that would have made it better is if we were respecting these bearish narratives and disrespecting this bullish narrative. So we were all targeting high resistance lows, lows resting inside of fair value gaps because we have this 1 hour bullish fair value gap right here. The better thing to do is to maybe be patient, take less trades for the overall week, take less trades overall in the week, and wait for the scenarios to play out where it's obvious and it's easy. Like on the 21st when everyone took that long setup, that was like all the time frames were aligned and it was easy. I think that's the lesson I'm taking away from this week. This is the 15-minute chart of the AM session. Holy cow. But yeah, taking fewer trades, taking more A+ trades, because I'm not in the business of comparing myself to people anymore, but I'm looking at people who are ahead of me, and like Patrick and Blake, they're simply just not taking as many losses. Even though like the setups are mechanically there and they look correct, these other guys aren't taking as many losses. I think mainly for the difference is they're waiting for the context on the higher times to be better. They're waiting for everything to align up time frame, because that's when it's easy and that's when we all smack winning trades. If I can lower the times that I lose and still take the obvious winning setups, then my accounts will actually grow and I can request payouts, which is the overall goal, obviously. obviously. Like, I don't need to say that. You guys know that. But that's what this week was, really difficult and taxing. And I think that's the lesson I'm taking away, is not trading in these improbable conditions, being more patient, being more disciplined, waiting for the conditions to truly line up. Like if this was inverse, I would say there's nothing stopping us from going to the sell side. I can take a continuation lower, hopefully. You know what I mean? So capitalizing on times like that rather than choosing, it's my decision to still trade in something like this, like where maybe we're chopping because the conditions aren't clear, like not in agreement. So yep, a minor thing was stop loss at the high and low. I know I previously said like when you put your stop loss at the body or the high, like you're going to get stopped out either way, most likely for the same thing. So it's better to have better RR and take advantage of that. I am learning that I don't like that personally. I know that's what like Blake says, and some people do. Personally, how I want to trade is just put my stop loss at the high or low, and then I know like I actually got stopped out for a good reason. I think it does squeeze out better RR for you when conditions are better and like the market's just moving better. I'm not trying to blame bad price action. I think that's when it works out a little bit more. But to just keep it simple and easy, I want to put my stop loss at the high and low. And then the other big thing that I already just talked about was taking fewer, better quality setups. So yeah, that's it. I hope you guys took something away from this video. I hope you guys learned something. You know, if you took a bunch of losses this week, it's 1 week. Zoom out, collect yourself, collect your thoughts, I guess. Get ready for next week. Just try to improve though still. Don't just brush it off. But that is the end of the video. Thank you guys so much for watching. Please like, subscribe, comment down below, and I will see you guys next week. See you guys. God bless you guys.